Away from matters to do with the Africa Forward Summit, National Treasury Cabinet Secretary John Mbadi is scrambling to reassure the public that promised tax cuts for low-income earners are still on the table, despite the missing tax laws amendment bill that was supposed to deliver this relief. The Cabinet Secretary now insists he will slot these changes directly into the 2026 finance bill. Our business reporter breaks down what this means for your payslip and the cost of your next smartphone.
Now, the National Treasury Cabinet Secretary John Mbadi has sent mixed signals on the expected reforms on the pay-as-you-earn structure. The changes is supposed to increase the tax-free income from the current 24,000 Kenyan shillings to 30,000 Kenyan shillings, which would mean more disposable income for low-income earners.
Remember, there's a war in the Middle East. We are looking at the impact of that war. Already, we have reduced VAT on petroleum products. We don't know for how long. So that is something we must factor in our revenue projections. We are also looking at the overall impact on the economy. But there are reforms that we have also implemented at the Kenya Revenue Authority, particularly targeting personal income tax. We wanted the personal income to broaden the base for personal income tax to increase, and then that would help us to compensate for the loss in this pay-as-you-earn.
But there is a catch. With the No Tax Laws Amendment Bill in place, Mbadi now says the same proposals will be inserted in the Finance Bill 2026, currently going through public participation. A delay, the CS points to a volatile global economy. Treasury is currently simulating the damage, a move that could cost the Exchequer 35 billion shillings a year. The CS is also heading for a showdown over Mitumba.
So they asked for a simplified tax system where they pay at the point of entry and no one comes again to demand for any taxes. That is why, apart from VAT, which is paid at source, at the point of entry, we agreed with them that for income tax, we deem 5% of custom value of imported goods, whether clothes or whatever it is, as profit. 5% as profit. And then we tax that 5% at 30% to give you 1.5%. And it becomes the final tax. No one chases these business people again for other taxes.
Now, the CS also addressed the issue of rental income tax, which he insists stays at 7.5%. And on mobile phone taxation, he says phones will be taxed after they are activated. And on broadening the tax base, the Finance Bill 2026 is targeting card financial services, which the CS says are milking money from financial institutions, and they should also be taxed. My name is Kelly Boss, reporting for KTN.
Thanks, Kelly Boss. A lot happened.